This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. Gonna spend a few minutes talking about a short in the QQQ today. And I wanted to explain, it is a day trade. It's based on two smaller time frames. And I don't spend a whole lot of time day trading or necessarily focusing on that in these videos, but I do believe it's important to recognize that these signals take place in all different types of scenarios and in all different types of time frames. And if you can recognize it on a tiny time frame, which tends to have a little bit more noise on it. And so today is going to be a 10-minute and a 2-minute combination. But if you can learn this specific pattern and the combination that I'm going to show you and a few of the nuances, you can apply it to a monthly and a weekly or a weekly and a daily just as easily. So I think, just every now and again, I like to mix these in because I want to make sure you recognize that you can really learn from these short-term trades. And if you have a simulated account and you can put these types of trades on if you have time during the day, I think it can really supercharge your learning ability. You're gonna learn a lot quicker. The more trades you do, even if they're in simulation, the better you're gonna get. So I want to start with this. Again, I'm going to go with this 2 time frame pattern. I've got a 10-minute chart on the left side and a 2-minute chart on the right of the QQQ. And so, if you look at way this starts out, so here's where the day begins right here. You get a little bit of a mini gap up, and it immediately reverses within 20 minutes and starts to head downward. And so if you're one of these guys that likes to trade off the open, there's certainly patterns that develop quickly like this, and this happened to be a pinch play to the downside. If you look at the way this played, it was the first cross of the zero line to the downside, and then you got a 2-bar rally which started today. This was your first higher low, and then your second higher low right at the 40, really right in between the 18 and the 40, and both lines were declining at that point. So you had again, a pinch play to the downside, and notice the negative DI is starting to climb and show some strength. Now, I'm not going to get into that, but at the same time, I'm not going to get into the detail of this trade, but at the same time, you did have 18 crossing above the 40 on the 2-minute, and then you cross down to the downside, and you look at the confirmation of the MACD crossing its signal line, and all the strength of the ADX during that period. So if you wanted to play this right off the open, you had a pretty good signal. I don't really want to focus in on that trade because there's a few other things I wanted to show with respect to the second trade that took place today. And so we had the strong run to the downside off of that initial phase, and then it consolidated sideways until, what time is that? Let's see. This was right around 1:30, and in fact, 1:15, 1:30, we worked our way to the 18 on the 10-minute, which was declining, below a 40, which was declining. And so, if you go back and look at my original video talking about trading in multiple time frames, and I use an example of US Steel or something like that on a weekly chart. I mean, this is basically the same pattern. It's an 18 below the 40, both lines declining. Look at the strength of the ADX in this time frame. And when I see this kind of strength, so these are the types of nuances I wanted to focus in on today. So when I'm looking at the higher time frame and I see the 18 is below the 40 and both of them are declining, and they're declining at about the same rate, I always want to take a peek at the ADX and see if I have confirmation. And in this example, I clearly have ADX strength to the downside. Red is above green dramatically. The ADX is well above the 25 level, and it's holding throughout the consolidation. So this consolidated from about 11 o'clock 10:45 to 11 o'clock, it worked sideways for several hours. And so during that period, I always want to look at the ADX and see if it's holding its strength, and it definitely is. And that tells me there's probably more downside continuation. So when I see that, I am less inclined to be too worried about the MACD. If you notice what happened here, the MACD crossed above its signal line, and it could have given you the impression that you don't have as much strength to the downside. But this happens an awful lot in trends. And so while I know I'm constantly looking for pinch plays where you don't cross over, as long as the MACD line goes to a new low with price, and this did that. If we zero in a little bit, you can see we went to a new low. It was a marginal new low, but we did go to a new low, and this went to a marginal new low, and that confirmed the down move. As long as we have that, then I would consider this to be a playable trend, assuming that we have the moving average condition we want, and assuming we have the ADX position in the position we want. If we have those criteria, I'm not all that concerned about the overrun of the signal line. So I wanted to make that clear in this video. And then from a bigger picture standpoint, if I'm looking at this, I'm saying the higher time frame should focus a little bit more on the ADX and probably the moving average environment. And then when I go to the lower time frame, I'm probably less worried about the ADX, and I'm more concerned with the MACD on the lower time frame. So that's how I sort of look at it. I look at the ADX on the higher time frame because that's really the strength of the trend, and I'm playing the trend on the higher time frame. And then the lower time frame is more about the timing, and you can get away without using MACD or ADX. For your lower time frame. You definitely can. But they both add a little bit of value. And one thing is when you're rallying up like we are here. So let me just make sure we circle this spot. So this is the spot on the higher time frame. I just wanted to make sure we're in the same location. So that's the location. When this is rallying up and the 18 is crossing above the 40, I always want to check the ADX here. And if ADX is lower than the decline was, so here's the red or the seller's version of the ADX. That's a negative peak. And then this is the buyer's peak. And notice how weak it was. You couldn't even get green DI to cross above 25. I mean, that is very weak buying. So this move to the upside had no real strength to it. Once I see that, I don't worry about ADX from that point on. It really doesn't play a factor in anything that I do on the lower time frame from that point on. The only thing I'm making sure is that there's not a lot of strength in the rally. Once I get that, now I'm focused on the moving average setup, and I'm looking at the MACD. And in fact, I'm gonna move this over so we can see the MACD a little bit more clearly. So now we've made this sort of zigzag motion, but what's taken place there is now the 18 is above the 40. And we've got our counter trend play developing. And if I want to draw a trend line in, I can definitely do that. But the reality is once I get the 18 above the 40, I'm looking for that close below the 40 to trigger me and say that the trend on the higher time frame is getting ready to get going again to the downside. So I'm really looking for that close below the 40. What I like to do is look at the MACD to get confirmation there. And if you notice, you had the downside crossover basically at the same time that the price was breaking the trend line, it was breaking the 18, and it was breaking the 40, all at the same time while the MACD was turning down. So this is a way that I think if you were to write down your criteria on the higher time frame and then the lower time frame, and said, this is the types of things that I'm looking for. My focus, again, on the higher time frame is going to be the moving average environment, the price action, and the ADX. And then on the lower time frame, it's going to be the moving averages, the price action, and the MACD. And so I think if you use these two together, you can put yourself in a position to take advantage of the best parts of both indicators. Now, once you're in this trade, let me get rid of this. Once you're in this trade and we enter this stock, somewhere in this zone, you're getting short, around this area. Our stop's going to go above the last pivot high, And the distance between your entry and your stop is your risk, your initial risk. What we want to do is start to take advantage of moves to the downside. Once you get from basically the distance from here to here is 1R, one risk unit. Once you make one risk unit to the downside, you should really not lose money in that trade anymore. Now, this is for day trading purposes. This is how I would recommend doing it. If you get that one-to-one move, take some profits. Even if it's a quarter or a third of your position, take a little bit off and go to a break even. If it survives the rally like this did and makes another leg down the downside and you get to 2R, 2.5R, 3R, and you want to take more profits, I would definitely recommend that. Your goal is to get out of this trade by the end of the day. You're not going to milk it. You're not going to try and hold it overnight. Unless you're getting in and you know that the bigger picture pattern is something you want to be involved in, meaning the daily and the weekly. But I'm talking about a strict day trading pattern, and we have the 10 minute and the 2 minute triggering you in. The way I would look to take profits is take some off at 1R, take a little bit more off at 2R, and then when you hit 2R, put your stop at 1R and lock in the gains on whatever you have left. And then if you get to 3R and you want to take more off, you can do that. And in fact, at that point, you might just take the balance of the trade. Again, you're not really looking to milk intraday trades. You're looking to try and take advantage of moves that can last for, anywhere from, 30 minutes up to maybe a couple hours. And so hope this makes sense. I really want to make sure you understand the difference in this MACD play or this MACD pattern. Don't get too consumed with this overrunning the signal line. This will happen a lot, even in a trending pattern. All right. Please hit that like button, and we'll talk to you soon.